I'm Marcia VanderWoude. I'm an adjunct professor of personal finance at Grand Valley State University.
And I'm Chris Loiselle, and I'm at Cornerstone University. I'm a professor of accounting and finance there.
So the conversation started when I asked Chris, do you have a lot of individual stocks? And he said, yes, I do. And so I said, have you ever sold covered calls on them? And Chris said, no, I don't know. What is that? Mm-hmm. So I said, well, I will teach you because you can make tons of extra money on your portfolio.
And I like to make tons of extra money.
Yes. So basically the basics are calls and puts are options that trade on an exchange. Chicago Board Options Exchange. So it's all day trading, just like the stock market. Mm. And it's a strategy that a lot of people use, but there are so many millions of people that don't know about it. Even financial advisors have never used this technique. So I did it all of my career in Merrill Lynch and with clients and particularly in my own account. Mm-hmm. So what you do is we are not going to buy these options. We are going to sell these options. So it's called covered call writing. Writing is the word for selling. So each option contract covers 100 shares. So if you have 1,800 shares, you can do a lot of contracts. But you probably don't want to do call writing on all of your shares because in case you would get called away. So here's how it works. You sell a call that you say, I'm willing to sell 100 shares at that price. And that is called the strike price. So then we look and see where it's trading and how much what they call is the premium is the cash that you receive for selling the call, which gives the right for somebody else to buy the stock from you at that price. Okay. So what could be a potential negative to that?
Well, they could call my stock when the price is really high for a very low price.
Right. If you sold a call at $17.50 with strike price and it goes to $47.50, you'd get called at $17.50.
Right.
So you lose the upside potential.
Right.
However, we have a way to sort of determine what strike prices we should look at. Now, the higher the volatility, the higher the premiums will be. Now, the couple things that we're looking at may not have very high premiums, but we can still take a look at them. Well, and also when you sell a put, that means you're willing to buy more. So you sell one put, you're willing to buy 100 shares more at a lower price.
Got it.
So you can do both sides. Now, if this account is an IRA, you can only sell calls, you cannot sell puts. Because for puts, you need to have a margin account. And
just
so,
in case.
yes, so in case you get put, if you don't have enough cash in there, you have the margin.
Yeah, and a margin account is basically a loan.
A loan, right, you're borrowing against your own stocks.
Yes.
Actually, the best thing to have for a put writing program is treasury bills because they release 90% margin, whereas stocks only release 50%.
Oh, interesting.
Yes. Okay. So basically, you can go into Ameritrade and set up your account, and that's what you did.
Yes.
Okay. Now, the first thing you're going to have to do is sign option papers.
Okay.
And you get full disclosure. You get a sort of like a prospectus about options and the risks and so on. And then you get approved. Now, if you have an account in an IRA, you just sign the option papers. If you have an account in your living trust, for example, you have to have the trust agreement has to give you permission to do options.
Okay.
So it has to be written specifically in your trust agreement, and the brokerage house will ask for that document.
Got it.
To approve you.
Okay.
So let's go and see how this works.
All right.
So you have 1,800 shares of APTS. What is the name of that company?
Preferred Apartments.
Preferred Apartments. Okay. Now, if you want to go in and get a quote on it today, today is November 16, 2018.
Yep. Looks like it's 1546.
1546. And could you also pull up the high and low? I think you might have to go to summary or summary maybe. Yeah, so if you scroll down, maybe you can get the high and low for the year. 52-week range. 1360 to 2198. Okay.
All right, so some
Now-
volatility there.
Oh, a little bit. That's not too much in a year, though. That's not very much in a year.
Okay.
Yeah. And it pays a dividend of 6.15%.
Yes.
So that's nice.
Yeah.
So now you can make some extra money on it, maybe get up to 15-20% on this.
That
Yes.
sounds good.
But you said you had a very low cost basis.
Yes.
In this. Do you remember what that might be?
$4. I bought
Okay.
it for $4.
Cost basis, $4. Okay.
Mhm.
So would you be willing to sell 500 shares at $17.50?
Yeah, I think so. Sure.
would?
That's
Okay.
quite a bit higher than the current price.
Yeah.
And a very, very much higher than my cost basis. So that
Right,
makes sense.
so you would be willing to, okay, then you could sell 5 calls, and let's go to options now. You have to go back to that, there it is, right there. And, and then we don't want to sell an option for December, so we're going to scroll down there to April. So let's look at the April 1750 call options right there.
Right
Okay.
here.
Yes. Now that premium is 30 cents per share. So
Okay.
that will be 5 times 30 is $150.
Okay, that's 500 shares. 5
Yes,
calls.
you're willing to sell 500 shares at $17.50 by April.
Got it.
For that, you're going to get $150, and that settles tomorrow. I mean Monday.
Oh,
So
okay.
it comes in your account the very next business day.
Okay.
Okay. Now, are you willing to sell 5 more calls at 20 strike price?
Sure.
How can this be? This is not right. That's very interesting. That says they're $1.
Yeah.
It can't be, because it's a higher strike
Maybe
price.
it's actually 10 cents.
Yeah, but why would it show $1? Okay,
I
let's say
don't
it's
know.
10 cents.
Yes.
Okay.
So just like a restart.
So we're going to get $50 for
Right.
that one. Okay, now, are you willing to buy 500 shares more at 15 by April?
It's currently at 15.46.
Yeah.
So I actually like that stock. I don't mind buying
Okay.
additional.
All right, so now then we have to go down to the puts. Make sure that they, yes, put options expiring on 4/18. Options expire every month on the 3rd Friday. So let's say, oh, they're not trading anything. 17.50, 15. Okay, $1.68. So
Mhm.
$168 times 5, you're going to get $840 for that one.
Okay.
So on Monday, you have 200, you have 1,040
$1,040 extra dollars in my account.
extra dollars in your account.
Just for selling.
Right, okay, now what's going to happen? Are you listening, Mr. over there?
Mhm.
Okay.
What's going to happen?
What's going to happen? Okay, now we don't do anything. We just sit here. And by the 3rd Friday in April,
Mhm.
if the stock is over 17.50, what happens?
If the stock is over 17.50, somebody's going to take 500 of those
Yes, you're going to
shares.
sell
Yeah.
500 shares if it's over.
Yep.
And then you'll have a big profit, $13.50 on each share. So you have a
Yeah.
big capital gain.
Yes, that's bad.
That's bad. Okay, now let's say it closes at 19 7/8. So what happens to this one?
If it closes at 19 7/8,
Yeah,
these calls
closes
would expire, right?
Exactly.
And
Closes
no-
at 19 7/8.
And I get to keep
These
my
will-
$50.
Yep, these will expire.
Okay.
All right, so if it closes at 19 7/8,
Yes.
what's going to happen to these puts?
Well, if it closes at 19 7/8, somebody is this. These are also going to expire.
That's correct. These
Because
are going
the
to expire.
strike price is lower.
So, then can you do it again?
I can, after
Yes, you can
April
keep
18th.
doing it, then you can go do it for October, whatever, just keep doing this around the clock.
Ah, so what
Yes.
you're saying
And then
is-
you might get braver and say, well, I'm willing to sell a lot of it. You know, you might come to a day and say, well, they've changed their philosophy and I don't want that stock anymore, so I'm willing to get called on more.
Okay. All
Right, in the meantime,
It's better than selling the stock, right? Like, instead of just go outright selling your stock?
well, you can do that too. That's why you maybe don't want to get all of this covered
Yes,
by
right.
an option. So when
Yes.
you have only underlying stock, it's called a covered call.
Okay, I see.
Okay?
Yeah.
All right, now you just acquired 6,300 shares of WMC.
WMC.
So why don't you pull that one up, and what is the name of that? That's another REIT.
Yeah. WMC. Shift WMC.
And let's look at the dividend and the high and low minute.
It's Western Asset Mortgage Capital Corporation.
Yes, Western Asset Mortgage.
It's currently at 10.
10,
If I
okay,
go
the
to
summary
It shows
shows the
854
854.
to 1138.
Okay, you're right there.
52
Good
week
price
average.
that you paid for that.
Yeah.
And what does the current dividends show us?
Current dividends are 12.35%.
Wow.
Wow. I'm so glad I bought that.
All right. Okay, let's see if they have any good options.
All right, let's check it out. So we're going to go to the options, click them, and then choose expiration of...
Let's do
April?
April again.
Okay. All right, there's two.
Oh, they're just two strike prices.
Mm-hmm.
I don't know if we even want to do it on that. Maybe we
Okay.
should just look at some puts.
Okay, so not enough call options.
Not enough
to
call
really
options and
do
not enough
anything.
premium to
And not
make it
enough premium.
worthwhile.
But how about puts?
The
Wow.
puts.
Okay.
They're for April. So you're willing to get put more, right?
Sure. I like it.
All right. So you're willing to get put some at, are you willing to get put some at 750?
Yes, for sure.
How many do you want to get?
I really like that stock. I mean, we could
So
do
10 puts?
sure 10 puts. That's 1,000 shares.
Yes.
Yeah.
All right. At 750, strike price April,
Yep.
750, strike price. And the premium for that is $15.
Okay.
$15 each times 10 is $150.
All right.
Okay, and are you willing to buy 1,000 more at 10?
Let's see. We're at what's the current price?
10.
10. Sure.
All right, so we'll sell 10 more puts
Yes.
for April at strike price of 10.
Okay.
And those are trading at 50 cents each.
Okay.
So that will be
$50
50 times 10,
times 10. $500.
$500.
Yep.
So you just made an extra $650. It may not happen. If
Nope.
it does happen, that's okay with you.
Yeah. Yep.
Right. And so you'll enhance your total return. We'd have to calculate that out if we did it twice a year,
Yep.
how much extra we'd make percentage-wise. Can you do that in your head?
No.
Okay.
That's why I have you as my financial advisor.
Correct. Okay, now we have one that might be a little bit more volatile. The more volatile the stock
Yes,
is,
this is an oil company.
we call that a higher beta.
Right.
That means that the options will have a lot more premium. It should. And there's a lot of volatility in the market anyway these days.
Yes, especially with this little company.
Okay.
It's taking a little while.
All right.
The
The
summary.
high and low.
High and low is 30. Well, it's not that bad. 34.22 to 39.46.
Okay. And the current is about 34. Let's just use
34.
round numbers, okay?
Yep.
Current 34. Okay, and do you know what your cost basis is in
I-
that? And do you know what is the dividend?
I don't remember the cost basis, but the dividend rate is 8.62%.
So who wants to sell for 2% CDs, right?
Right. Yeah. I mean, these companies
Great
are paying really.
strategy.
Yes. This is a company that owns the infrastructure for the oil companies out there. So they own all the pipelines and all of that stuff.
Oh my.
And they just rent that use out.
Yeah.
All right.
You can certainly teach me a lot.
Options, right?
Okay, options.
Let's see what they got going.
Let's see what they have, the calls, or let's see when the next 6 months. I like to go out 6 months.
Yeah.
Should we go to
15?
June, or should we
June?
go?
You want to do it June?
Yeah, let's
okay,
go to
let's
June.
do June.
Okay.
All right, there we go. These are calls.
These are calls for June.
Yep.
And what are the strike prices there? Not very many. A 35 and a 40.
Yeah.
So, are you interested in selling any at 35?
Sure.
You might.
It's been a little scary in the
Has
market
it?
with this particular client business, so I wouldn't mind selling some at 35.
How many
I have
shares?
900 shares.
So you'd sell 5 calls?
Yeah, let's do 5 calls.
June 35 strike price.
Mhm.
All right, and how much are we going to get for that? $2.30 each.
Yeah. Yeah.
230 times 5. $1,150.
Wow.
You probably ought to do that one, Chris.
I would think. Yeah.
As soon as you get your option papers back.
Yeah. And then
Okay, and then you'd be willing to sell
the other 4
the other 4
for 40. I wouldn't
calls
mind if I got rid of all of it.
June for 40. And it's $50 each
$50
times
each.
4, 200.
200. All right.
So we're going to make $13.50 today.
Nice.
So
Okay.
between this, if you do all these 3 today,
Yeah,
you can take your wife out for dinner.
I can. At a nice restaurant, perhaps.
Yes. Cygnus or
Yeah,
one of those nice places.
that's right.
$3,000 richer today.
Nice. Well, you paid for yourself.
Right. So, okay, so what's going to happen? If by June it's at 50,
You're
you
gonna
get
call.
called,
They're
you
gonna
sell
call me.
500 shares.
Yes, I do.
Okay.
Yeah.
All right. You're willing to do that.
Yes.
You've said it in advance, so you don't have to think about it again.
No, I don't have
All right.
to worry about it.
But you don't want to get put anymore. You don't want to buy
Not that one.
Not that one.
But we can
you-
check. Maybe if the price is right for the puts, I might take a risk.
Okay. All right. And then you think of something that you don't own yet that you'd like to own,
Oh.
and we can sell some puts on that.
NVIDIA is
NVIDIA.
pretty
18%
volatile.
NVIDIA. Okay. What's the symbol for that?
NVD there.
Do you know the symbol for NVIDIA?
NVDA.
Oh. NVDA.
Let's do NVIDIA.
Oh, let's do that.
That one's down 18%.
Oh, geez, it's an expensive stock, though.
I know, but I have a lot of money.
You do? Perfect. Okay. Let's go to
Oh, look
high-
at that volatility.
High and low for the year.
292.76
Oh,
is
wow.
high, and 161.61
Oh,
is
so it's
low.
near its low.
Is that a good thing?
That's a good thing, because you're
For
going to sell
puts.
some puts. Right.
Yes. All right. Wow. All right.
Okay. And does it pay a dividend at all?
I'm not sure, but yes, it's only 0.3%. It's probably a growth
Yeah,
stock.
it's a growth stock. Yeah.
It's a growth
Okay.
stock.
So we won't care about that for this one. We just want
No.
to see if you want to get put.
Yes. And it's at the low. The price
Yeah,
right
yeah.
now
So
is
that would be a
close to the
perfect
low.
one to look at for selling some puts.
Assuming they're a decent company.
Uh-huh.
Let's go to options, right? And
Yeah.
then we want options expiring.
And we want
on
only the puts.
only the
Yeah.
puts, 'cause
Yeah.
I don't have any calls.
Yeah, we don't want to sell naked calls. So.
No.
Oh, they have a lot of expirations, but should we go to June?
Yeah, let's go to June.
June,
And we're looking at,
put
wow,
strike prices. Okay.
which strike price would
Oh,
you
man.
recommend?
The premiums are high, even though those are very low strike prices relative to the stock. So I wonder what the long-term chart was. I wonder if it used to trade much lower than this, or if this is
It couldn't have because it's already at the low.
okay.
161.
It's all-time low. It's
Yeah.
all-time low.
Well, I don't know about its all-time low.
Well, that's the thing.
Oh.
I'm
okay.
wondering.
How do you, the history?
Maybe a. Oh yeah, 164 trade 5 years. All. What about all? Is it how long has been publicly traded?
Oh, a long time.
Long time.
I used to own some.
Oh, you did?
Long
Okay.
time ago.
All
So,
right.
see?
Oh yeah, way back there.
2016, 32, 33,
Oh,
33,
my.
31, 28.
Wow.
Yeah. And then
So,
all of a
what do you
sudden
think's
it
going to
blew
happen now?
up.
What do you think's going to happen? Go back to options and see.
Yeah,
Maybe you just want to
you
dip
gotta
your
feed in.
like
just-
2 puts or something like that.
Yeah, 200 shares.
200 shares.
Yeah, just to,
Sell 2.
because there's a lot
Just
of
to
risk
see how it's
there.
working.
Yeah.
So what can we get for a June?
June put
Let's go a little higher strike price.
at,
Are you willing to get put at 140? Well, you don't want to go higher than the current price.
No.
Do you want to get put at 135?
sure, 135.
All right.
Based on current price?
135. Based on current price, we're going to get
580?
580 times 2. $1,160.
Wow. Okay.
All right, so shall we call it a day?
I think so. Yeah, I think we've done enough work.
Yes, okay, so now you have 30, 40 plus 1160. So your total intake in today is $4,200 coming in on Monday.
Okay.
All right.
That
Do you
sounds
have
like a
any
good-
questions for me, Chris?
I don't.
You're understanding this really well
Okay.
and much faster than anybody I've ever tried to teach.
Really?
Yes.
Well, hopefully the students that are watching this will feel the same way after they watch the
Exactly.
video. Thank you so much
Thank
for your
you.
help.